Are cryptocurrencies on the brink of collapse? G'day, I'm Biko Konstantinos, and that's what we're going to discuss today. Please hit that like button and please subscribe to my channel. It'd be great if you could leave a comment so that I can keep making content that you find valuable. In a previous video, we talked about never trying to catch a falling knife. And by that we mean never trying to pick a bottom when the markets are falling super fast. Now, if you've got strong beliefs in something and you're just willing to buy something and hold it for a long period, then definitely feel free to buy whenever you like. But when the market is falling rapidly, sometimes it pays to just wait and see what happens with the market. When there's been some massive selling, usually markets take a little bit of time to assess, what's going to be the next momentum. Is it going to be up? Are the bulls going to regain control? Is it going to be continued downwards? Or is it going to stabilize and form a bit of a sideways, maybe a basing pattern for a next move up? Or maybe it might just trade sideways and then sellers might come back in again. So it really pays to just watch the market and consider what the crypto is doing. Consider the outlook for crypto by looking at price action, by looking at the news, by considering where's the big money going. So is the big money, the big managed funds, the big ETFs, are they buying more crypto? Are they starting to stock up again because of low prices? Or are they pulling money out because they can see a lot more risk in this crypto market? And maybe previously they were buying because of a safe haven type aspect of cryptos. But with all the selling lately, have they started pulling a bit of money out and then going to reassess and maybe not hold so much money in cryptos? So that's an important consideration going forward. Now let's have a look at some of the charts of the most popular cryptocurrencies to really try to assess where they stand at this current moment.
Let's start off with the Bitcoin chart in US dollars. So simply we're going to be looking at two simple moving averages. The first one is 50-day and the second one is 200-day. We're looking at the daily chart and we are going to use just one resistance / support line to determine where we're at on each chart that we're going to look at today with cryptocurrencies. So for Bitcoin, as you can see, in general, the chart's making a topping type formation. The 50-day more current moving average, which held the price right up until this point, is currently turned downwards. So recent trend is down. The longer term 200 moving day average is still moving upwards. Now the price has dropped down below the 200-day moving average, and the resistance or the support level that we've written, I've put it down at 40,000, and that's because the original spike back here in early 2021 just breached that 40,000 mark. So that's a very important psychological level. So I've written that support / resistance level at the 40,000 mark. So as you can see, when the price actually broke through that level, it had a massive one-day spike just in one day to 46,000. So very significant level, this 40,000. And as you can see, when it dropped below 40,000, one day it fell all the way down to about 30,000. So a very important level is that $40,000 level for Bitcoin. So verdict for Bitcoin, definitely looks like it's in a current downtrend from recent price action. For the chart to look healthier, the price action needs to regain, get above this 200-day moving average. So stay above that whilst the 200-day moving average keeps rising. And also it needs to regain this $40,000 mark. So if the price can get back up above 40,000 and stay up, that would make the Bitcoin chart look a lot healthier. If the price finds resistance at 40,000, it might spike above, but if it comes back down and can't remain above 40,000, then there's a strong possibility, or I guess the charts would suggest that this 40,000 would become a resistance level, so the price may then trend down and might find difficult to regain that 40,000 level. Here's the chart of Ethereum, the daily chart of Ethereum in US dollars. So as we can see from Ethereum, we've had a very strong rise. We had an initial peak around that 2000, and then it sort of consolidated a bit before breaking above 2000 and then really rallying straight up to above 4000. So that's why I've drawn this support line slash resistance line at the 2000 mark. For Ethereum, I think this level is critical because it and had that initial spike and consolidated. Then we really want this to be a support for Ethereum because there'll be a lot of people watching that level. A lot of people will find this level very significant. So if it can hold and the price can keep going up, then that would be very supportive for Ethereum. Because it's basically halved from a high of over 4,000 to the low 2,000s now. That's done quite a lot of damage in a short term. And the reason for that is most likely because it really went parabolic. It went up so fast, so quick. So Ethereum now is trading below its 50-day moving average. 50-day moving average is still going up, but it's not going up as sharply. It looks like it could be sort of flattening out. So it'll be interesting to see what the price action does. So if the price action stays sideways or lower, this 50-day moving average will really start flattening out. The price is still above its rising 200-day moving average. So that's a positive for Ethereum. So the takeaway for Ethereum, there's been significant damage to the uptrend, and that was because Ethereum rose too far too quick. But so far, it's still above its strong support line around that 2000 level. So the very important thing to see is, can it stay above that 2000 level? Can it keep trading above its 200-day moving average and start to rebuild a base and start going higher from here? Here's the chart of Binance Coin, which is a popular cryptocurrency. So just looking at this chart, we had a spike here in February 21 above 300, some consolidation above 300 before rising and really starting to take off. So I'm putting my support resistance line at that 300 mark because I think that's a critical line going forward because we had this consolidation and then a breakthrough. We really want to see Binance Coin get some support at the 300 level for the chart to remain looking quite or looking somewhat healthier. So we can look at this 50-day moving average line. It was going up strongly. The price held towards it right up until this point. And then the price has significantly dropped recently, trading right around this support slash resistance line at 300. The 200-day moving average is still rising, but it's not really rising that sharply anymore. There's been significant damage due to this really sharp fall. So it's really at a critical juncture right now. If the price breaks below this resistance at 300 and can't regain 300, then I guess this chart looks like there's a potential for a full breakdown. Here's the chart of Dogecoin. So as you can see, Dogecoin only really started its rapid rise in April. So it's a bit later than some of those other cryptocurrencies. real significant level is this first peak, initial peak at around the 40 cent mark. So it had that peak, it consolidated downwards a bit, then it broke through clearly, really ramped up and traded all the way above 70 cents. That was around the time of Elon Musk going on Saturday Night Live, and there was a lot of rampant speculation. So as you can see, the price came back down to this 40 cent level. There was a lot more buying, so that's why these levels are significant, because if people see the price rise, come all the way back, they think, wow, this level of 40 cents is where it got to first time. Let's buy. So the price went up again, close to 60 cents, and now it's traded down below 40 cents. It had a super spike down low here, but has come up a little bit and then slowly sold down the last few sessions. So at the moment, the price is below its significant resistance level of 40 cents. So it's becoming a resistance level, but you would want to hope that level becomes a support level. If the price can retain it and trade above that level, then it has more chance of continuing upwards. Both moving averages are still positive, so the 50-day moving average is rising. Same with the 200-day. It's a lot lower because the price action has been so recent. So really, you want this price to remain above this 50-day moving average, and for it to do that, it really has to regain that 40 cent level. There is a chance of breakdown now that it has traded below that 40 cents level, and if it does break down, I mean, it could go anywhere. So it's one to be careful of. Now, the last chart I wanted to look at is Cardano, which is another very popular cryptocurrency. So as you can see with a lot of those other ones, there was an initial spike in that February period, 2021. Now the price continued to trade below this $1.40 level before finally breaking through in May. So that's where I've drawn our support slash resistance line. And as you can see, the price really ramped up to about 240 and has come back, now trading just around that $1.40 mark. So as the price is still around there and hasn't broken through, I would class this probably as most positive looking chart out of all the ones we've looked at today. The 50-day moving average has originally flattened out when we had this sideways pattern, but has started rising again, but may start to flatten out due to this quick fall recently. It's a long way above its 200-day moving average, but still there is significant risk here, because if the price falls through this support line at 140, then that 140 figure then becomes a potential resistance, and then potential for the price to trend lower after that. Now we're just going to do a quick recap of the cryptocurrencies we looked at, but just look at how far they've actually fallen. So Bitcoin, from a high of 64,995, is currently trading around about 36,600 or 36,700 right at this moment, and that's approximate fall of 43%. Now let's have a look at Ethereum. So Ethereum, from a high of 4379, is currently trading around 2,200, which represents a fall of about 49%, which is actually massive in percentage terms. So this has been a massive drop, and it's only, still above this 200-day moving average because it just ran so hard so fast. So let's have a look at Binance Coin. So Binance Coin, from a high of about 695, has fallen to 28 286, or even now it's just come up to about 289, which represents a fall of about 58%. So that's a massive drop, over 50% from its high. It's trading really close to that support slash resistance line. So a lot of damage has been done on Binance Coin. Let's have a look at Dogecoin. Okay, so Dogecoin traded to a high of around 74 cents, is currently trading around 34 cents, which represents a fall of about 54%. As you can see with Dogecoin, trading below its support line around 40 cents. So quite negative in regards to it needs to get above that support line, back above it, and that would be looking much more healthy. So now let's look at Cardano or Cardano. So Cardano went to a high of 247, is now trading around 142, 143, which represents a fall of 42%, which is a very large fall. It's trading right at this support line around about that 140 mark. So for Cardano, we would want it to remain above that if it can, and that would be showing some strength. So looking at all of these charts, we can see that the falls have been between 40% to 60%. And so that in a normal sort of a trading or charting sense represents a massive fall. Because it's occurred so quickly, you could probably even class that as a crash, especially if it gets to about 50% fall. It's definitely what most would consider to be a crash. So going forward, will this crash become a full collapse in the crypto market, or will it lead to some stabilization and potential return to the uptrend? Well, time will tell. So that's one thing. No one really knows for sure. But one thing that it has done is done massive damage to these cryptocurrencies. It's done massive damage to the charts. And I think it's also done massive damage to just cryptocurrencies in general. So there was an initial period of excitement and euphoria. There was rampant speculation when cryptos were really in the uptrend and nothing stopping them. But in this last sort of 2 to 3 weeks, selling has really started to ramp up, and it's looking like a potential crash, which could lead to a potential collapse. But time will tell. The prices are currently around very close to a number of very significant support lines. So if those lines get taken out and then they can't get regained, then there is potential catastrophe, you could say, that could occur in the crypto market.
I don't think anyone really knows what the future is for cryptocurrencies. But one thing I know, and one thing I've talked about previously, is that risk has increased. The daily amount of volume, the daily range of trading has massively increased. And so because of that, volatility has increased as well. So it plays to be safe, it plays to have an exit strategy, and it plays to consider what's the big picture for cryptocurrencies. So maybe you might find a gem out of all the different cryptocurrencies, which might do brilliantly. But if the entire environment turns negative towards cryptocurrencies, it will be a lot harder to make genuine profits in the future. I'm Biko Konstantinos. I've really appreciated you watching my video until the end. May all the trades be in your favor.